Monday, April 7th. Wow. Okay. Stan Ehrlich, market analysis. Um, I always start out with the stock indexes and go to futures and got a couple of stocks I've been following. Now, I haven't seen this kind of volatility for decades, but I have seen it. And it's been 53 years in this market watching business. Now, what do we got? Obviously, extreme volatility. Most of you haven't seen this kind of volatility before. And what happens when you have this extreme volatility, other than the obvious? Well, usually one of two things. Sometimes the extreme volatility is the beginning of a big move, up or down, usually down. And sometimes extreme volatility is the end of a move. And usually that is, well, actually it could be up or down. It's called a blow off top at the top of a bull market, and everybody's just too damn happy. And on the way down, it's like everybody's giving up the ghost and there's no hope. And all of a sudden, the market starts to turn around and it's a bottom. Well, we have RSI to work with and historical support resistance and a variety of other tools. We have a market that dropped off on the E-mini down to a low this morning or yesterday afternoon, depends upon the index. And it was not particularly at a price level which I would have picked for a low, but it is in a zone where we have some support proven, and it did bottom out around the middle of that zone so far. I can't say bottom out. We're still down approximately 10 points on the spider, and that would be about a hundred and yeah, about 110, 100 lower on the E-mini. And I'll take a look at the short-term charts in a second. So I think there's a chance that today's low might be a bottom, but with this kind of volatility, it is not. It makes it harder to be more convinced that we're seeing a turning point. But I'm got to say what I got to say. I got to say what I see here. So maybe we got ourselves a low. We certainly are extremely overbought, oversold. And the indexes, generally speaking, got down to 10 to 11, which is extremely oversold. In fact, I don't see in the last year or maybe two, looks like 2 years, the market ever having been down to 10 or 11 for the E-mini. Let me see the last time we were down there. Oh my goodness. Okay. Looks like January of 22. And that actually was the beginning of that bear market, which was at the first few days of 2022. And it bottomed out October 13th of 2022 with a bullish engulfing ER buy signal. And in many cases, it was ahead of a head and shoulder bottom. I remember distinctly because I was doing my YouTube at the time. So there you have it. Extreme weakness can be the beginning of something, and that was back in January of 22. And that was the last time we were down to 10 or 11. So I think we have the opposite here. The extreme weakness could be showing a bottom. And as I am speaking, we are just starting to pop back up again. And I wanted to get to that before it started to do this. We have what appeared to be a flat bottom right triangle ever since the lows around 7:40 a.m. California time. They're all about the same, and there are basically 4 or 5 of them that are in the same price range. And every high after the rally high at 717 was a lower high and a lower high and a lower high until just now, literally a minute ago. That could be breaking the upside bear trend line across the top of the flat bottom right triangle. Normally, a flat bottom right triangle is bearish. It'll break out on the flat side. So that kills that idea at the moment. But remember, if it does start to get below and close below the 49.89-ish, then it's probably going to sink off and challenge today's lows and maybe even go lower. But right now, looks a little different. This is very, for those of you who are not used to this volatility, and most aren't, don't do anything. And if you do something, be extremely cautious about your risk factors, because this can hurt really, really fast. On the other hand, it can help really fast also. All right. Spider, basically same comments, except the spider came down to an old high that was again January of 22, January 4th, it looks like, of 2022, and stopped almost exactly at the same price and has popped back. You know that we've made since 6:30 this morning new highs for the session, which in some cases, of course, the futures started yesterday afternoon. Other cases like the QQQ and the SPY started 6:30 California time, and then sagged back down to lower on the day. We're now down about 6.5, 7 points, 70 on the E-mini at the moment, but moving so fast, it is utterly ridiculous. Example, we had a rally of 40 points on the S&P 500 that took 35 minutes. That's 40 full big points that took a little over half an hour, most of which, 2/3 of which, took place in about 8 minutes. Huge. Again, I haven't seen this kind of volatility, and I've been watching markets since 1971, 72. So, next, 1 minute on the spider. There's that low and the high, and this is the 8 minutes from right here to right there. So, what do we got? A little delayed data here. We haven't got the up to date QQQ support area. Turned it around so far. We do have an outside trading range day. We have a bearish engulfing at the moment. And believe it or not, it was a bullish engulfing a little while ago when it was around the high of the day, of course, high of the session. And now it's a bearish engulfing at the moment. If we were to close higher than yesterday's close, Friday's close, we would have a bullish signal. That would be supportive of the support area, the extreme oversold getting down to 12 or 11 or something on the QQQ concept of turning around. There are gaps to close at higher levels also in the spider and the QQQ. All of my downside objectives have been way overshot from the double or triple highs. So all of what I was talking about in the last couple of months has come true, and a lot more, unexpectedly a lot more. But I got to tell you, the more I look at this, the more I'm thinking there's possibly something to the beginning of a rally here. Bear markets end when the last piece of bearish news comes out. And even if the more bearish news comes out, what happens is the news is not as bearish as what was expected before the news came out. Or if it's outright bullish, that would be a big shocking surprise, and markets would turn around very aggressively. But just as long as it's not equal or more bearish, that tends to be supportive to prices. So here we are, maybe a bottom. Let's rescale this and pull it in. And we came down to some support, but it's nothing particularly special on the NASDAQ. Nope. I can't really make a case for that being particularly important. Few prices, but it's more of a zone. Next, 1 minute, NASDAQ, incredible rally. And now the rally I just talked about on the E-mini is starting to fail back again. Didn't go anywhere. Basically, you still got your flat bottom right triangle. I thought it was going to go up a bit more, but it broke a little line and it didn't go anywhere. and the trend is obviously down. Next, we got the YM, broad long-term support, just incredibly oversold, got down to 12, 10, 11 area. Last time it did that, we did have a short-term low and a bullish engulfing. Nice. Okay, and that was December 20th or so. That's really only about twice now, maybe three times in the last year and a half. Next, YM, 1 minute, looks like the rest. Russell Index, new lows since 2020, November 2020. But that is a huge long-term support area. And it's doing the same thing that the other indexes are doing, including, in this case, an engulfing higher high, lower low, extreme oversold condition. Tells me this market is trying very hard to turn around. Let's see what happens. Russell, 1 minute. Now, bonds and notes. This is not what I was expecting at all. This is a bearish engulfing and overbought conditions around its resistance area and a killer to my head and shoulder bottom formation. In particular, if it closes lower than the neckline, where it is way below the neckline right now. So I've got to say, if there is no recovery today, closing back up above the neckline, then I'm going to probably remove the head and shoulder markings for the low in November and the January head and the last shoulder in March. Got to do it. If the pattern doesn't work, then it doesn't work. We also have a bearish engulfing and a huge one in the 10-year notes. And what can I say? I'm going to have to do the same thing here. The only difference is the 10-year notes are staying at or a tiny bit above the neckline right now. So they're not actually collapsing and staying below like the bonds. So there's a little bit of a discrepancy. But the signal is the same. Bearish engulfing AR cell signal, red, usually starts a bear move, period. Wow. Next, we've got crude oil falling apart. And I'm not complaining about that, gasoline. So we're looking at the lowest lows today, all of a sudden, since June of 23. Now that is basically almost 2 years ago. Now at the moment, it's not staying down there. So this could be a low day also, because also RSI got down to 17, which is extremely low. Below 25 is oversold, and I look for bottoms. Below 20 makes me a little more anxious that we're about to have very soon in price and time a bottom. Anything 20 to 10, I'm thinking it's going to be the same day or the next day for a bottom. We start getting below 10, I'm screaming bloody murder. You better watch in the next few hours for some kind of a turning point. So I think we're starting to see evidence that we're going to make a short-term minor low, come back up to probably 65 area, and we'll see what happens after that. Heating oil, same comment, but a support area, not quite as low on the RSI, 22, but oversold, in support, a couple of my favorite combinations, not quite turning around yet, still lower on the day, but rebounding pretty good. I think it's trying to turn back up again for a decent rally. And a different story in natural gas. The head and shoulder top I've been watching for weeks now is doing nothing wrong. Its minimum downside objective is 2.980 if you want to get sticky about the exact prices, or a little bit below that. And we do have a new low for the move down today. And if it stays where it is right now, we have a new low close. Not quite below the previous lowest low. So, a little bit of a bounce maybe, but it's very minor. Otherwise, overall, head and shoulder top, downside breakout, a little slow to get the ball rolling. Rally up to the neckline, stopped at the neckline plus a little bit more, but didn't close above it. Tried it a second time last Thursday, dropped off sharply Friday, and now a new low today. It's doing fine. There's nothing really wrong about the head and shoulder top so far in natural gas. Perfect. What about gold, silver, platinum, copper? Well, gold's falling apart after being overbought. Too bad we didn't get a sell signal on the high day, which would have been great. We came close. But the upside objective that I had marked weeks and months ago had been fulfilled last week, and here we are coming right back down again. And after being overbought within 3 days afterwards, we're now very close to oversold. That is on the realm of too much too quick on the downside. So we're not there yet, but we're getting close to watching for a buy signal, and we're starting to dribble into some support, and it may still get down to 28.81. The silver has fallen apart. It's gotten all the way down to the lows and actually made it a little bit lower than the lows August of 24. And the low today is the lowest low since April of 24, obvious a full year ago. So this head and shoulder top in silver, which I was a little skeptical about because the downside objective was so bearish, is working perfectly. We had a major downside breakout on Friday, collapsing, new lows for months. Believe it or not, but today's rally high is almost exactly on the neckline. Perfect place for a short sale. You would have caught almost the high of the day. Maybe you got lucky, you got the high. The downside objective is still very much intact at 23.5. And today's low is a lot lower than anything for the last several months. Now, it did bottom out at support at the bottom of the support areas and bounced pretty good. We're now a little higher on the day, but I don't think it's going to go any further. I do not want it to make a higher high than today's high. That would be above the neckline, and certainly close above that would be pretty much a killer for the head and shoulder top. Otherwise, what can I say? It's doing fine. I can't say anything different. Next, platinum, just crash. We've got the lowest lows in platinum since May of 2020. 5 years, and oversold condition as you might have expected. Pretty oversold too. It got down to 18 or so. So I think we're going to see a bounce here, probably back up to the resistance area, which is going to be starting at 930 up to probably 950, and maybe top out in there. So it's going to get back up to today's high, and then that's 927, already 930 almost, and maybe a little bit more than that, and then turn down again. That's what I think is about to happen. All right. Look at what happened. Copper. New lows in copper. Excuse me, the last year. After barely making new highs for a long-term bull trend only about a week and a half ago or so. Sorry about this cough. Okay. Now, way oversold. Unbelievable. We're down to 9. When's the last time it got down to 9? July of 22. And that was extremely close to a major, huge long-term bottom. Well, at a minimum, I certainly expect a bounce. Probably at a very bare minimum up at 4.15. And I can't rule out something significantly better than that, up to maybe 4.5, which is not much above today's high. This has fallen apart so much, so fast, it's ridiculous. You went from 4.8 down to 4. Huge percentage decline in 2 days. Or how about 3 days? You went from 5 down to 4 in 3 days. Oh my God, yeah. And in 4 days, you went from 5.1.5. Yikes. All right, time for a bounce. Now, grain markets. We have support. It's slowly killing my long-term bullish ideas. We are still testing an old bear trend line, which is now a support line, but a bearish support line under the market as you go down, and a previous low that's important. You close below 965.5, watch out, you could drop a lot more. But if it holds, you still have a whimper of a hope for a double bottom formation or a triple. Big long-term sideways trading range for a year. Well, not quite a year, 3/4 or so. Soybean oil, so far hanging on to its head and shoulder bottom, double shoulder, starting bullish engulfing March 1st, 24. Little double low for a shoulder, May 24. Bottom of the market, single, August 16, 24. Then you got your inside shoulder on December 13th of 24. And recently a last shoulder low of March, the middle of March of this year, only last month. Now, the rally stopped at resistance in overbought condition and came down some in the last few days. Not too badly. Now we're at support. Looks like it's trying to hold in soybean oil. So it has still hopes of developing a really big long-term bullish bottom, which supports bullish moves in the other grains to some extent. But we got to start going back up. Next, meal, nope. Looking like what beans could look like. Meal's totally a new low ever since September of 22. New lows for a couple of years almost. And staying there. Now, yes, it's oversold, and yes, it could turn around, but there's so much resistance above the market, it's got to chew its way through a whole variety of resistance areas in order to turn into a bull trend. This is long-term bearish. And I gotta say 190 something, low 190s maybe. That's incredible, but I gotta say it. Corn, it's hanging onto a bottom potential like soybean oil, pretty similar. All we have to do is start getting a lot stronger. Today we're actually up a couple, 3 cents, making a minor new high for a week and a half or so. Last lows, little double bottom are holding. Pattern overall is holding. Well, we're going to see how this thing pans out. We start to close above today's highs. I would be inclined to put on some modest longer term long positions. We did get a buy signal exactly on the last low of the double bottom. That's great. That was March 28th. Let's look a little more detail here. Yep, that's good. And this is a new high since then. So the pattern is working. I'm just a little, doesn't have too many friends. Then we'll look at wheat, and its new lows in the last week and a half or so, forever, like soybean meal, frankly. So I've got no major hopes at the moment for wheat, although support oversold condition coming up very slightly, not enough to cause me to mention too many things that are bullish here. There isn't any. Just a little bit more bounce to resistance, 552, maybe a little bit better, higher 550s, 558, 9, then stop and come down. Cattle, dropping like a rock here. Got a small double top formation. The first high was a bearish engulfing AR sell signal. Probably going to come down to 190, maybe even 188. Yep, that's my expectation. Next, hogs. Boy, oh boy, wandering around in pig pen doing nothing. I don't know. I gotta wait. Doesn't know which way it wants to go. We got a doji yesterday, Friday that is, and we got another doji this morning so far. Pretty much, maybe it got a little bit above Friday's high, but there's no trend at the moment. Here's my two stocks. Shell did come down to a significant support area. Previous lows way back at December, January that is of 24. Again, it bottomed out in oversold conditions at the same levels December of 24, and it just did it again in oversold condition today. Deserves a bounce. The oversold condition, because of the speed at which it went down, is excessive. Got down to 11-ish. The last time we were oversold that much, it turned around with a vengeance, and that was March 16 of 23. And the time before that, it did the same thing, turned around with vengeance. On the bottom of a break here. Come on. Let me pull this to the left. I guess I can't. That's the end of the data. All right. Back to the E-mini for a moment, and let's see if it's holding up. And then I'll let you go. And excuse me, here we go. Daily data and the 5-minute. Okay, support held again, and now it's making extremely small but minor new highs a second time. I don't know. Maybe it's going into a sideways thing, but it's just kind of tempting one way, tempting the other way, and back and forth. Going to have to wait until some kind of breakout here. I can't help but favor the trend, which is obviously down, but I've got my reasons, obviously, because of oversold conditions and support in some cases to expect some sort of rally. I'm going to go with some sort of rally for a few days, but I'm very cautious about that. You guys have a great day and profitable trading to you if you want to trade under these conditions.